All right, today I'm going to show you the second setup as promised, and that's going to be none other than the back test, the cousin of the trap. Let's dive right into it. All right, so in this video, I'm going to give you a little bit of a deeper dive in terms of how I view the market and the overall structures that I'm looking for and I see in the market. And basically, I want to give you this little rundown here. How often do you find yourself looking for these breakdowns like that? These are very nice when you're in them, don't get me wrong. I'm always looking for them as well. However, it is wrong to be always looking for these particular moves because, as I will quickly show you here, as you see these breakouts here, they do happen and they are very beautiful when the explosions come in to the downside or upside. The problem is that by the time these explosions come in, what we are forgetting as traders is that we've consolidated inside of a range for quite some time prior to the explosion down or up. So majority of the time as traders, we're looking for the wrong thing. Meanwhile, we should be looking for the consolidations period. Because in my opinion, the market about 80% of the time actually consolidates inside of ranges. It basically picks boxes to kind of ping and pong in between those ranges. And then afterwards, once it has trapped likelihood to the upside, likelihood to the downside, then it basically distributes into the trend leg that we're all always dying to be in front of, which would be like this trend leg there. You can see that nice explosion there. And then what ends up happening after the explosion? We consolidate the move. What ends up happening after a large period of consolidation? Very quickly, the market distributes. And then it's rinse and repeat all over again. We have the distribution happen, then we have consolidation because the market needs to consolidate whatever move we are essentially getting out of. And you can quickly see how majority of the time we end up consolidating rather than distributing the move. So as traders, we're looking for the wrong thing. Now, you can see that this was a previous all-time high I got for you right over here. We end up blowing past that high. Okay, we push through this very nice distribution leg all the way up to the 39.40 level right here. Okay, so we end up basically going right to the 40 here. However, I just told you that this was a previous all-time high. This is the current setup that recently happened right here. This was the previous high right there. That was resistance. When we finally blew through that resistance, what ends up happening is we usually, not always, but usually, we will back test right, come back all the way back on down to where we are breaking out of. And that's what I call the back test. Because on a technical perspective, on a technical standpoint, usually, whether that's the same day, in this case it was the same day, it could mean that we are going to be back testing this area at some point in the near future. When? Nobody knows. However, what's important is that you write down the level. You have a mark there, exactly how you'll see on my streams and how you'll see on all my videos. I got charts, I got levels basically lined up all the way, like leading back 300 points, right? But this is what I mean. This is the breakout. This is the back test, and we can take along of this back test, especially when it's the first time around. And look at that. It basically worked out beautifully, getting you through the previous resistance being right here. That is basically, in a shallow way of explaining it, the back test. We have resistance, we break through it. We back test, and then we move on higher. If this back test had failed, well, then at that point, we know that this trend is likely not going to last. But it did. We bounced from there, it giving us a nice opportunity to get back in long. All right, I'm going to show one last example here, and I don't want to bore you. You know, I can go with, there's hundreds of examples I can give you. We can sit here all day talking hindsight about how the charts move. But in general, the idea, the basis of this video is to show you the back test, that on a technical perspective, we always consolidate moves in this manner. We have the consolidation period. We typically also as well have a trap, usually both ways to the upside. You can see one right there, a little one, and you can see the big one being right here. So the market is going to move in a wave of consolidating first. Then the market distributes. Now you might be wondering, where do I get the hint of which way the market is going to do the distribution from? Well, very simple. One is acknowledging and respecting the trend. Well, trend right now, recently, if you haven't noticed, it's pointing upward. So in general, you should be looking and leaning towards the upside. Second clue is going to be right here. You can see this massive trap below this consolidation period. And again, this is displaying the power of the backtest. You can clearly see how we backtest where the trap basically begins right here. And this is another backtest entry. Usually, I would get long at the reclaim of this support level, okay? I'm looking for this explosion back on up into the range. Now, if you missed it, quote unquote, missed it, you don't need to FOMO in here. You don't need to FOMO here. You don't need to do anything. You just simply need to wait. You can see in this time right here, we back tested right to the top of the trap. Do you think it's coincidence that these things happen? No, it's the same buyers. It's the same people who are creating these traps. They are pumping, they are back testing, loading up even more, and leaving all these stops here as extra fuel, which they know they're gonna go and get later on when they fully distribute this move up to the upside. And look at this. This was very clear and obvious resistance in this consolidation period right here. What ends up happening? Like, it's just mind blows. It blows my mind as to how precise technical analysis can be. You can see we have the trap, the back test. We have the resistance right there, which, respecting the trend, respecting everything, we can see that we can push through it, and then we back tested right to the tick. This back tested literally to the tick of the resistance of this consolidation period. And that is just phenomenal, and how the charts move in this manner. So again, this is called a backtest entry. It's a more aggressive entry than the simple trap to the downside here. I always look, I love the traps better, but this is why I say that this is kind of like the cousin of the trap, because they always kind of come hand in hand. You have the trap, usually the backtest, and then you have the continuation in whichever way the trend is headed. So try to digest that. I'll do more videos, and later on this week I have the final video of my final setup coming out, which is gonna be none other, the infamous, the one that actually is still a pain in my butt, and that is the breakdown. Breakdowns are the most difficult setups, especially in a market that just continues to basically work its way on higher. But I'll be making that video shortly this week, so stay tuned. And I hope that this kind of backtest idea you can kind of see and visualize. In fact, you can kind of go in your charts and you can see, you know, draw some lines of resistances, see where those backtests came in. Do you find a trap, right? Like, these are things that when I was in my learning stages, I was just trying to figure out how the market in general moves. So stay tuned. I hope this video helps. This is the second video of my 3-part strategy. Thank you for watching.